Hey, good morning. It is Thursday, February 18th, 5:41 a.m. Chicago time. Take a look at what is going on in the markets. We had a huge rally up, so much for a half gap fill. I went back and looked at that gap on the NASDAQ and want to talk about that a little bit. But yesterday's direction guide, long direction, um, just really was perfect and timing these retracements. I love the way that the Heikin-Ashi Unirinko allows me to sit out of the retracements and gets me back in once price starts moving back in the direction of the price action. So here is the long direction, or the both directions if you want to see both ways. But I just like to put it on long direction so that I can just see when to get back in. Let me pull up the daily chart. Here it is. And here was this gap up that I was talking about that started this from the weekend, from Sunday to Monday. And then we came back down and hit the high of the the 10th. So we came back and retraced into this high. So I would call that about a half gap, not quite a half gap fill. And then it took off again. And this is important, this gap location, because this is that wick that had held the market up for so long. And then, of course, it broke through, sort of went sideways for a week, and then now we're back up and through that wick. So that was a very important push up in the market. And of course, we hit our previous lows back from August. So sort of like a double bottom in an otherwise uptrend. Put the weekly on here so you can see the uptrend. There's the uptrend. So here's our double bottom and an uptrend. And I think that's how the market is looking at this currently. And we should be trading, with that in mind, with a few caveats. We have our 50 moving average that is still bearish. So this really is the perfect place to buy in a buy zone in a uptrend on a retracement. But given that we have very, very mixed fundamentals on the daily, we still have our death cross. This is the 200 EMA, the white, and the 50 EMA in the red. So that's your death cross showing that we are in a bear market. And we are racing up to hit this 50 EMA at 46.20 on the NASDAQ. So this is almost out of room. At the most, juice out of this would be this upper little tiny wick area for the reversal, but I think it'll probably hit at 42.60. So I think that we are out of room. We're going to come back and probably test this gap area again, or start pushing back down. So the euphoria is most likely over and done. We're out of room in the NASDAQ. That's why I was looking for yesterday these two levels for a rejection and to push it back down into the wick area. That did not happen. It kept going because of the Fed minutes. And Bullard said that he did not see a reason to raise rates. But folks, I want to say that this is a broken market. There's no more juice on this QE, and the market is acting like there's QE left, and there's not. Feds will start tightening. The data yesterday was good, and we actually had a little bit of inflation come back in that number yesterday. So a little tiny bit of positive number. So I would not get real excited that this is a resumption of any bull market at all. In fact, I think it's going to be catching some people off guard who are going to be seeing this news and are going to try to get back into the market to catch an early trend, and they're going to get spanked on their 401ks. So I'm recommending if anyone hears this to just hold off. I would not buy in my 401k until you see price close above the 200 EMA for 2 days. So with that said, let's look at the crude market and see what's going on over there. We have some euphoria on the possible Iran production freeze for January levels. I think that they'll say anything at all possible to get prices up. I'm a conspiracy theorist. All of a sudden, Iran comes back in the market and they're talking about production cuts. Cough, right? Excuse me. They'll say whatever they want to say to get the prices up, and they're going to pump as much as they can to get the price because the prices are up. I'm not a rocket scientist, but even I could figure that one out. So take that with a grain of salt too, and be prepared to ride this trend as long as it's going, but recognize that we could be moving back down at any time. But currently, we are on this little hammer weekly, tiny hammer move up in a brand new uptrend. So we're going to continue going higher. We've got some resistance that we're running into, just like the NASDAQ. So we're going to probably get some bumpiness between 32 and 34 as price stalls out, trying to figure out if it's going to punch through, get to these wicks on top. Make this a different color so I can see it. A little brighter. We need some really bright color selections. Okay. So we've got two different resistance levels, and so this will be a little bumpy ride, but there's a couple of bucks left before we get there. So today definitely is going to be another up day as we break through yesterday's high. And get back up there. Again, leave it on long direction, your direction, or full direction, or just put it on your energies to let you know, yes, continue moving higher with the trend. So enjoy the uptrend today, what's left of it for these markets, and be aware that there's going to be some overhead resistance that we're coming into. And enjoy your profits. Take them and put them in your account while you can. Have a good one. Thank you so much.